love the channel and find it useful in becoming a happy retiree. Subscribe today. I want to talk about an article that Neil Williamson, Hondo, here from the station, sent me this week. And it's like my perfect article. And I think he knows that I'm always on the outlook for absurdity when it comes to financial news, especially when it's coming from CNBC or the Wall Street Journal or Forbes. And this story for me is like a ripe, juicy, shiny, pink, crisp apple. It's just like right there, perfect. Neil Williamson, again, this week sent me this article. It was in CNBC. And the title, let's see. So it's in CNBC. And this isn't the first time. This is a Ron Paul. This is an article about Ron Paul and what he says about the market. And it isn't the first time. So this is the title starts out with this. This is not the first. Ron Paul issues warning. Okay, isn't Ron Paul always issuing a warning? Ron Paul issues warning, and this isn't the first time that Paul has warned that Wall Street is about to have an epic correction. On Trading Nation last spring, he said that a correction was inevitable. Despite a string of recent NASDAQ highs, the broader market correction hit about 10 months later on February 2nd. Well, what a crystal ball he has. And that's as if he was right on calling a correction. Like he had some great insight into the world that he said, we're going to have a correction. Saying that you're going to get a correction or saying that a correction will happen at some point is about like saying it's going to rain at some point in Georgia. Well, yeah, of course it is. When he talked about a market correction, by the way, this is about a little over a year ago, when he said, hey, we're going to have a correction, the Dow is at 21,000. Today, after the correction, now we've fought back a little bit since the correction we had in February, the Dow's at about 25,000. So even with the correction, the Dow is about 16% higher than when he said, hey, we're about to have a correction. Now he's saying that the recent downdraft, so the start of at least the correction that we started in January or February, that this recent downdraft is the start of an inevitable calamity. And the markets are going to have another 08, 09 hit, but even worse than the 50% that we saw. Again, this is coming from Ron Paul. Now, again, just beware of where you're hearing these predictions from. Ron Paul is a guy for years, and maybe it's ramped up since he retired from Congress, but Ron Paul is a guy that for years has been connected with the newsletter folks that write about all that doom and gloom. So again, there are these really scary newsletters that are constantly making these dire predictions about how we're going to go back into the Great Depression, and there's going to be these long bread lines. And although you and I both know that corrections happen, bear markets happen, and they'll continue to happen. They'll happen again. But what he's talking about here is the sheer magnitude of what's going to happen in markets. And what he's really saying, or if you're going to have a big correction like that, you've got to have something fundamentally change, or earnings have to fundamentally change in order for something that bad, like in 07, 08, to happen again. In 2009, earnings as a group, or the S&P 500, dropped to around $40, and that's the collective earnings for the entire marketplace, the entire S&P 500. That number has grown steadily over the last 9-year bull market. And this week, again, and we'll talk about this here today on the show, this week was really the 9th anniversary of what has been a pretty ferocious bull market. So we've had 9 years higher and higher and higher. So we were at $40 at the depths of the recession as the market finally decided to no longer go lower. That date, by the way, was March 9th of 2009. And then earnings grew to $50 and then $70 and $80 and $90 and $100. Now, this year, estimates are in the $158 to, let's call it $160 range. And for next year, 2019, they're well into the 170. So $172, $175 for the S&P 500. Just remember, the reason I'm saying that is that you've got to go back to the beginning of this bear market, or the beginning of this bull market, the end of the bear market. Profits had dropped to $40 collectively for the group. Today we're at 170 or 160. So yes, quantitative easing has put some pressure on rates, and have the quantitative easing by the Fed has lowered interest rates. They're starting to creep back up. And for years, it created a push into stocks to some extent to find return as bond yields got lower and lower and lower. However, the fundamental underpinnings, the foundation for stocks, which is their ability to churn out steady profits and increasing profits, remember, increasing profits, earnings, have to grow in commensurate fashion. And giving this market, and that's exactly what's happened during this bull market run. It has not just been created and inflated on hot air. It has been supported by the kind of foundation that, quite frankly, should support a market run up like this, and that's increasing profits year over year over year. Now, I'm not going to say that this market is cheap. It's not an inexpensive market, but it's also nothing like the bubble pricing that we saw in 2000 when we had a 50% correction, and 2007 when we had a more than 50% correction. You take the kind of the approximate market level where it is today, so P over E, or multiple, or earnings, let's call it 2750 on the S&P 500 divided by $160 in earnings. That gives you 17 times earnings. That's what the market's trading at right now. Not 27, not 36 like we saw in the last mega, right before the last bear market that we went into, or two bear markets ago. So far, earnings have continued to support where this market is. So just be careful of people making predictions, especially congressmen or former congressmen, and predictions from, quite frankly, politicians making predictions about the market. Last I saw, just this weekend, and I think this was somewhere on YouTube, Ron Paul was doing a commercial for Bitcoin IRAs, for God's sakes. So just be careful. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.